You're listening to 5 o'clock Somewhere Real Estate Investor Podcast. This is Brett Bernard, Jeff McNett. Our dickhead producer, Richard, is in the studio with us. And also today, we're going to be talking to Terry Morris, CFP with
Raymond James. I'm a dual employee. Raymond James and Pinnacle Financial
He's going to give us a bunch of information that's secret that he's not supposed to tell anybody. So stick around.
Are you thinking about investing in real estate, building your net worth and your income, but you're just not sure where to start? I'm Joe Garner. I'm a mortgage officer and an investor. Let's explore your options on financing your investment property. Connect with me at jogarner.com. Call or text me 901-482-0354. Proud to be a sponsor of It's 5 O'Clock Somewhere Real Estate Podcast.
Welcome back to 5 o'clock Somewhere Real Estate Podcast. Brett Bernard, Jeff McNett, Richard, and Terry Morris, as we mentioned in the intro with Raymond James. But Terry, before we get into that, I've got to do something to my producer, Richard. So what I did is I went ahead and I researched funny
You
British
and your
traditions.
research.
Again.
You're going to hurt yourself.
I try my best to insult this gentleman, but I just don't get where these come from. So I want to tell you the first one that came up is called they have an annual wife carrying contest. Richard, the hell is that? That's because you guys are so damn ugly that you can't get a wife, so you're like practicing for kidnapping.
Have you looked in the mirror lately?
That's right.
I think the wife carrying tradition is something that's been resurrected.
Bog snorkeling. Who the hell bogs? You know what a bog is? It's a swamp.
Sounds like the Welsh would do that.
It is a bog full of peat moss, and you try to snorkel through it as fast as possible.
I've actually never heard of that.
Okay.
Might be an Irish thing.
Cheese rolling.
Oh yeah, cheese rolling. That's near Gloucester.
Have you ever done cheese rolling?
Nope.
Okay, so apparently you take a giant wedge of cheese and you roll it down a hill and try to outrun it. The one that got me the most was there's a World Gurning Championship. You know what that is?
Nope.
It's the World Championship for who can make the goofiest or funniest face. So those are your traditions in your home country. This is why Americans go to Britain and are like, what the hell is wrong with you people?
Hey, Americans, are you having a good time? Yeah. Well, we hate that you're here. Yeah. No, I'm not done. I hate you. I hate your guts.
I just thought it was funny. I mean, these things are cheese rolling got me. I just don't see how you get I do. You can get a bunch of drunk British people together. You give them a giant wheel of cheese and say, go get it. And they do. They chase it down a hill. All right, so let's get back to our show. Terry, welcome to the show.
Thank you, sir.
So Terry's going to be with us today, and Terry and I met on the phone a week ago, right? Called me about a particular situation. I did what I could to help out, and he made the mistake of saying, man, I owe you one. If there's anything you could ever do for you, let me know. And I said, well, there is one thing, by the way. We are looking.
I need to hit recall on that email, by the way.
Yeah. We have been looking for an expert. Somebody.
Is that in air quotes? Expert,
air quotes. Experts. Well, our tagline is, we're not experts. We actually know what the hell we're talking about. All right?
That's right.
So.
Do I need to go out of town and come back? Because experts are always from out of town. So I'm local.
We don't have experts in this room.
I did stay in the Holiday Inn Express last night.
There you go.
Makes me an expert.
That makes you an expert. So we've been trying for, a year now to get somebody in that understands taxes.
Okay.
We deal with investors that buy and sell real estate, build investment portfolios. Some buy for income, some buy for growth, some buy for depreciation, some buy for, there's all different reasons why they build portfolios. And there's so many questions that come our way about the pros and cons of buying real estate when it comes to taxes, when it comes to estate planning. That's why I was glad you navigated your HR department and got them to give you the blessing to come on.
We're going to have Richard read the disclaimer in a really cool British voice.
Yeah, he's going to have to.
He may end that with a joke at the very end. We're not sure.
Okay, let's get this legal stuff out of the way. Raymond James Financial Services Advisors, Inc., also known as RJFS, is not affiliated with and does not endorse the opinions or services of Brett Bernard, It's 5 O'Clock Somewhere Real Estate Podcast, or the Stamps Real Estate Group. Raymond James and its advisors do not offer tax or legal advice. You should discuss any tax or legal matters with the appropriate professional. Securities offered through Raymond James Financial Services Advisors, Inc., member FINRA, SIPC, and are not insured by bank insurance, the FDIC, or any other government agency, are not deposits or obligations of the bank, are not guaranteed by the bank, and are subject to risks including the possible loss of principal. Pinnacle Asset Management, Pinnacle Bank, and Pinnacle Financial Partners are independent of RJFS and are not registered broker-dealers. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc.
All right, well, let's jump into it, Jeff. You want to ask the first question?
Well, he's got some possible topics in here, and a few of them have caught my attention. And
Let's start with number one.
how do you see the rental market in Memphis right now? Go ahead and give us.
I'd like to hear his
your
opinion.
overview, Terry.
We know what
Well,
it's
just,
doing.
once again, just to clarify, I started studying taxes in 1996 when I went to the University of Memphis, got accounting undergrad. But in the world now, I help people with investments, help people with tax deferral, tax planning, and estate planning. So I'm not an expert in real estate. I follow it. It's a hobby. At one point, I owned 18 rentals. Those 18 rentals got in the way of my day job. And so I was buying coming out of the 08-09 crisis, and I think real estate bottomed kind of in 11 around here. So I started buying 11, 12, 13. I was buying houses at $30, $40, $50 a square. And at that point, you talk about math. I brought I brought the computations here, and one of these that I purchased on Cornelia Lane, I bought it for $33,000, rented it for $800. So when you run the math, I was getting a 2.42% rent to total, and so you could
That's
easily,
outstanding.
You could easily get cash flow.
Where was this house at for $30,000 though?
So I was at Colonial Acres, 38117.
Oh,
so
okay. Well,
White
that's
Station to the east,
yeah.
Perkins to the west, 240 to the south, and
you bought it for $30,000.
There were a lot of deals.
$33,000.
How long ago was that?
It was 2012.
That was
Wow.
Brett.
And
Those
then-
were the good old days after
And I
the Great
sold
Recession.
it in 16. I bought it for 33, sold it for 48. Thought I was a genius with my 43% profit. And then the guy bought it for me for 47. And now Zillow says it's worth 121.
Well, I will tell you, I used to
I
own
should have held through COVID.
I owned the White House in the corner of Colonial and Flamingo.
Okay.
Paid $62,000 for it. And I think in 2016 or 2017, we sold it for $115,000. So I think you sold yourself short.
You said
well,
you were
COVID, yes, ran up prices
Yeah.
extremely. I mean, those houses were $100,000 houses. I bought them for 50, and I thought they would come back to 100. And after 4 or 5 years, realized they weren't going to come back to 100. So I gave up, pulled the plug, stuck with my day job, and the investors that bought them for me when COVID hit realized those $100,000 prices again. So
now you're like me. You wish you'd kept them all.
But I think the cap rates or whatever you call, I don't know what you call them in this world, but I say rent to total price, and I was buying them at a 2 or something.
We function on the 1% rule. That's the base.
Right. And
right?
so
you're at 2.4, which was outstanding. That's double what
right,
most
but in a
investors
bad
can get.
location. So I mean, I think that 1%'s a pretty good general rule. That's where you are today with valuations. Coming out of 08-09, you could get 2% plus. But I was buying in areas of town that didn't attract the most wonderful tenants. So,
Well,
but I think
where was-
today's market is more fully valued. We're not at a discount. We're not at a huge premium. We're not going to roll over.
that 38117 is a pretty good area. I mean, where were your other properties at?
Once you get down to 240,
You get-
38117
so
isn't
when you
that
go,
great.
When you
It's a little.
Did you
when
stay,
you get south of Quince and
okay.
get-
Well, maybe back at that time.
Did you
but that
have 'em
area
on
has
the
made
other-
a tremendous boost. It really has picked up a lot.
I sold too early.
Yeah, you sold
Did
too
you
early.
stay north of 240, or did you go venture down off Perkins into the south side?
I never went south of 240, but even when you get south of Quince to 240,
Right,
that
yeah.
area was at that point. I got out my final of the 18 that I had. 8 of those were in Covington, Tennessee. 10 of those were here locally. I probably got out of the Memphis locations in 2018.
What was your ultimate decision to get out of it altogether, other than the fact that you're focusing on your day job, as you said before? Why not
Day job.
Why not just hire a management company and let it hit?
Should have. So hindsight, I should have given up the 8 to 10% in management fee, and I would have doubled my capital at this
Right.
point. So that was a bad mistake. But tenants, a lot of bad things. One thing on my list was I put on there, has any bad thing ever happened to you? There is an underbelly to rentals.
Yeah.
And my 2 stories are that I had a location on Dunn Avenue here, and that's 38111, I think, or a little closer
Yep.
to University of Memphis. So the location on Dunn, tenant moves in, and they gave me a sob story, and I didn't do a credit check, and I just, I was going to let her in. And so she gets in, and I don't do a background check, don't do a credit check. She starts not paying. Eventually, I have to evict, and when she leaves, I go over to the house, and she's taken every appliance, every light fixture. She took the vanity in the bathroom.
Wow.
And so I call her, and she says, oh, I didn't do that. And I said, well, the neighbor said there was a white truck here, and as you were leaving, you were loading things in the white truck. And she goes, well, that wasn't me, and you can't do anything about it. I said, I've got your name, your date of birth, and your social. You don't think we can do anything about it? I said, if you don't bring those items back, I'm taking you to court. And so ultimately she said, well, and I said, well, let's go to court. Let's see who, after doing, later figuring out she had some felonies and things in the past. I said, who do you think the judge is going to believe? And it was very strange. About 3 or 4 days later, I was going to escalate this legally. I got a call from a stranger, and it was her cousin. And she said, I know you're going to pursue her legally. I know she's already been in trouble. She's going to go to jail. And so if you'll give me till Saturday, everything will be back in the house. And this stranger once again calls me about 11 p.m. Saturday night and says, I've done everything but one item. If you'll come tomorrow at noon, everything will be back in place. And her cousin, to keep her from getting in trouble with the law, put every appliance, every light fixture, reapply. She even took the thermostat off the wall.
Wow.
Took everything.
Good grief.
So there was that, and then there was an instance on Dorset. I don't know if you guys know Helene,
Yep.
Three Little Pigs, Dorset. My grandmother had a house. I lived there for a while. I moved out, thought it'd be a great rental, just kept it as a rental. And had a couple move in, married couple. They declared bankruptcy, and what they did was they put all the debt on him, so he declared bankruptcy, and so she was still employed. She had the income, and I asked, well, can I evict them? And they said, well, no, because one's declared bankruptcy. And so they get a bankruptcy, and they start paying me $200 a month back rent and $1,500 a month current rent or whatever it was. And somehow they defaulted on the bankruptcy. I don't even know how. I didn't even know that was possible.
Oh, yeah, it happens a lot.
So I got a letter one day. Well, I had the writ of possession already. I'd already gone to court, already got the writ of possession. I guess it's good for a year.
Yep.
So I've talked to somebody in the industry, and they said, go down there and kind of act like you don't know what you're talking about. So I went to the clerk, and I said, hey, I've got this writ of possession, and I never executed it, and could you guys stamp it? And, I just forgot to get it stamped, and this was, 6 months later. So the court clerk stamps the writ of possession. And I go, and there was a guy down there, and I said, well, how do you evict people? And he said, well, you pay me $180, and I bring Bob, and we evict them. It was the craziest thing ever. I show up at 9 a.m. The two guys are already loading the stuff onto the front yard. And so the guy that was being evicted, that was disabled, he comes out in the front yard, sits in a chair, starts drinking a beer. He calls his cousins. His cousins show up with a moving truck, and they start moving the furniture into the moving truck. So I'm sitting there. The mom comes home mad. The daughter whips in the driveway mad. I'm thinking I'm going to get shot. I'm thinking somebody's going to punch me in the face. And I stay there, and then we're going to rekey the lock.
Right.
They're going to drive off with the moving truck. We rekey. We're back in place. And at the end of this, I went over to the guy that had declared bankruptcy and the guy that we were evicting, and he had a couple of beers. And we high-fived each other, and he drove off.
Yep.
I didn't get shot. I didn't get punched in the face. It was the craziest
Jeff and I are in these
ever.
neighborhoods all the time, and you find most of these people, you've got some unseedy people. You got some people that are bad eggs, but most of these people are just good, hardworking people, blue-collar, just trying to live their life. So,
I mean, I've had people move in for 6 years and never be late on a rent payment.
Yep.
It's amazing.
I've got a couple of investors that have had long-term tenants like that. Great, and they take excellent care of the house. So, I guess investing in real estate is like investing in anything. There's a risk to it.
Yeah, but you had a pretty good run out of 18 rental units, if that's all you had.
Got some, good.
Overall,
tax,
would have called that a success.
A little bit of tax-free income due to depreciation.
So what
and then
type
when you
of,
sell them at cap gain. So ordinary income is much higher rates than cap gain.
Yeah.
So when you sell these properties and recap that depreciation.
So what type of tools did you use and formulas did you use in determining the purchasing of your rental properties back then, like as opposed to versus now? Has any of that changed?
If you ask my wife, she says I'm a robot because I got an accounting undergrad. I was working for a big 6 firm. They forced you to take the CPA exam. So I passed CPA exam 94. then went back to Christian Brothers, got in this industry, got the certificate for financial planning, got the CFP. And so I'm a numbers guy, spreadsheet guy. So I used to look at Zillow values. I used to look at property tax assessments, last sale. And before I viewed a property, I had a price in mind. Mm-hmm. It was worth 80 at one point. Last sale, tax values 30. You look at what the potential rent's 800. And in my mind, I would think I'll offer 40 or 45. And then you walk in, and if it's turnkey, maybe it's 50. And if somebody ripped the kitchen out, maybe you offer 40. And I was amazed. And what my final trick is I would watch. I might have 3 or 4 properties I would watch, and they would drop the price 1,000. Mm-hmm. And they would drop the price 1,000. That's somebody that kind of wants to sell. And then they would drop it 5 or 10. And if I ever saw a property I was watching at 60, the day they dropped at 10, I would make the offer, right? Because that's the point of capitulation. Yep. There's a family member, mom died, there's somebody in Florida, they don't want that house in 38117, and the second they drop the price $10,000, I would come in that day and say, cash offer, can close in 10 days. Bam, they took the offer.
Well, since the 2008-9 crash, when Memphis started coming back, Memphis is now ranked 3rd in the country as the best place to invest. Memphis is full of Japanese, Australian, Israeli investors. A lot of hedge fund groups have picked up tons of property here. So
right.
Since you've unloaded all of your stuff, I would say now that through, what do we say? It was 52% of the homes now are rentals?
52, 53.
In the city of Memphis, because after the 08-09 crash, investors just started pouring into Memphis. So now you have entire neighborhoods that are 80% rental properties.
Which drove prices up.
Drove prices up.
The 2.48% that I was buying in 2012 is non-existent.
Dead.
You can't do that anymore.
This is probably one of the few places in the country you can still get 1%. You can start at the 1% and grow it from there. We get a couple of them. You get 1.25, 1.3, somewhere in there. But getting 2, that's damn near impossible. But with all of that happened, you've got this segment that says, well, there's too many investors own property here. Not enough people own their own home. But that's due to demographics. That's due to culture, right?
So, Brett,
they just don't buy property.
Median income. You look at median income with today's
they
values
just have no
and
interest
rates.
They have no interest in buying a home.
So, Brett,
they'd rather rent the rest of their lives.
We're in the top 3 best places for rental incomes at your 1% rule. Is that what those other markets?
They give you good returns starting.
I'm getting a lot of investment calls now that are trying to inch up to the 2%. That seems like a giant leap.
It is. I mean, you can probably pick up 1.5, close to 2 in Detroit.
But what about? Okay,
but who the hell wants to be an investor in Detroit? I mean, seriously, you might as well go to south side of Chicago and start buying $20,000 houses.
Or you could roll the dice in Gary, Indiana, and see how far they go.
Oh yeah. Well, it was Cleveland, Ohio, or Detroit was 1. Cleveland, Ohio was number 2. Memphis is number 3. Little Rock's no longer on there. They used to be in the top 5. They've dropped to like number 11.
Yeah.
So,
well, let's give Terry here some hard questions now. Let's
Let me put my CPA hat on.
Let's call on the tax man right here.
Wait, you want to take a break? Let's take a break. Go roll some cheese.
I'm just curious. So let's say I'm an average investor. I've only been doing it for 5 or 6 years. I've got 10 rental properties. I'm putting all the cash flow back for maintenance and repairs, and I'm taking all that other money, and I'm just doubling down on first 2 properties, trying to pay those mortgages down.
Okay.
And I've completed that. Say I own 10 rental properties, 3 of them are paid for, getting good cash flow, $1,500 a month. Where does that put me from a tax standpoint? Is that rental income more favorable income than, say, my payroll job at FedEx? Explain the difference and how much better that taxable income can be.
In the world of receiving income and putting it on a tax return, ordinary income, W-2 is what we'll call it, that's kind of the worst place to be. There's no flexibility, there's no deductions, and so I live in W-2 land, and the government, my last dollar in between FICA and federal is over 40%. So I make $1, the government takes 40% of that last dollar. So your day job, W-2 income, is highly taxed. Ordinary income rates are the highest. And with rental income, like when I ran the analysis of my Cornelia Lane property, I was cash flowing $9,000 a year, but I was depreciating over $2,000 a year. at a 27.5-year depreciation. So I was only getting taxed on $7,000 of that income. So $2,000 of that was tax free, would later be recouped at cap gains rates. Cap gains rates are 15-20%. Ordinary income can reach 40 to 42%. So rental income from a tax standpoint is one of the best percentage-wise.
Okay, so
A, potential lower rate. B, I call depreciation a phantom deduction. Depreciation isn't real. It doesn't cost you anything. Nobody reaches in your pocket, takes depreciation, but the tax man allows you to take depreciation off, and that reduces your tax bill. So your effective rate on rental income is much lower than your effective rate on your day job.
So I'm collecting rent, and I'm running it just like any other small business. If I'm collecting $1,200 a month rent, and I've got $800 in taxes and insurance and mortgage payments, and I'm left with $400, do I have to pay the tax on that $400, or can I defer some of that if I pour it back into the house into a reserve account? Do I have to pay taxes on it then, or can I just keep rolling everything back into the property?
Yeah, so a lot of people think that the mortgage balance and cash have something to do with taxes. The tax calculation is rent is a positive, insurance deducts from that, and taxes deduct from that, interest deducts from that. You don't get a deduction for a principal payment on your mortgage. So that's capital in your pocket. You don't get that deduction. You do get the depreciation deduction.
So that's considered income.
A lot of people think, if I put this in the business account and don't put it in my pocket, I won't get taxed. But that's not a true statement.
But I've got $400 left over. I'm going to get taxed on that.
The only way to not get taxed on that is redeploy that into the business by making a repair, for instance. If I bought a new dishwasher.
But I want to take that money and buy the mortgage down, buy the principal
down. That doesn't save you money on taxes, but it saves future interest. So buying the mortgage down is a good idea, but it doesn't help your tax return.
But if you're paying back a loan, that's non-taxable, correct? Because you borrowed the money, you're paying the money back.
You get taxed on the $400 net. You're going to get taxed on your net income.
So even if you apply it to the principal,
you can either go buy a Lamborghini or you can pay down debt.
That's what I'm saying. So you're going to get taxed on the $400, even if you apply it to extra principal of the loan, of the money you borrowed.
You can take it to Vegas. You can buy a Lamborghini. You can pay down debt. You're going to be taxed on that cash.
Okay.
The net cash you're going to do something with, and it's really a great idea to pay down debt. Because in the future, when you retire, it's all cash flow, right?
Absolutely.
A lot of people think that, if I put it back in my business, I don't pay tax on it. That's not a true statement.
Well, I would much rather put that $400 toward the principal balance than to go fix a light fixture or make a repair, unless it's necessary.
Yeah, you don't want to just write off stuff for the fact.
Correct. A lot of people want to spend all their money at the end of the year because it's a great. But you're to your point, you have to do something with that.
And my attitude is, if you're going to pay tax on it, you might as well be putting it toward the debt and gaining something out of that.
Well,
or a remodel. If you're renting $1,200 and a $10,000 remodel raises rent to $1,500, then putting money in cabinets might make sense.
True.
But paying down debt is a great long-term strategy for retirement.
Well, Brett, I had a buddy that ran a small, successful business, and everything was a tax write-off to him, okay? He'd go buy a new truck as a tax write-off. He'd take his family to Disney World. He would tell somebody he took a bunch of clients down. It was tax write-off. His goal was to write everything off to where he was left with zero income. And, that's great short term, but long term, eventually you're going to have to show some income. And you're going to have to reinvest.
If you get audited and they realize the Disney trip wasn't business, then you owe back taxes, penalties, and interest.
Jeff and I both have boats down at Pickwick, down on EDOC.
All three of us.
Oh, you're on?
There we go.
You're down there too?
I'm at Grand Harbor.
No way.
Oh, okay.
I'm on EDOC.
We're on EDOC. We're
at Grand Harbor or at
Aqua?
Aqua Yacht.
Okay.
We're at the very end.
Can we even speak to each other if you're at Aqua and
absolutely.
I'm at Grand Harbor? Okay.
Absolutely.
He'll teach you about cheese.
Cheese, yeah. We'll go cheese
before
surfing.
You go off topic.
Drag a wheel of cheese behind the boat. That's how we do it in America.
That's the fourth mention of cheese. Do you know where the big cheese comes from?
Where's that?
So in South America, the cheese would be delivered. And so your poor producer that you pay pennies would come and buy a quarter slice of cheese.
I wouldn't even give
buy
that
some
much.
cheese. The richest person in town, the wealthy person in town, would buy an
wheel.
entire wheel of cheese and take it to his house.
And they would begin
to call the wealthy person
your
the
little
big
cheese.
Oh wow!
Yes, but
that's his new nickname.
But I'm
Richard, the little cheese Brit.
I've
Just
heard
call
of,
him Lil Cheese, Lil Cheese.
that's his
that'd be
rapper name.
Rap name.
His rapper name is
Little Cheese Bread.
Little Cheese.
But at the end of the day, at
So
least
here's
L-
the
I
off-topic
don't.
question.
At least
So
I don't
what type
speak
of boat?
cheese.
You got to take me for a ride on your
I
boat.
just got a 32 Marionette.
Okay.
Flybridge.
That's your office? You deducting that into
Well,
your office?
I got a question for you.
That's what we wanted to ask you. How much of that
four
boat
or five
and the slip
times a year,
fees?
we take investors down there and we entertain. And I mean, we actually do this. Richard comes down. He's part of our network and our
You mean Little Cheese?
Little Cheese comes
Little
down.
Cheese comes down. Okay.
Little Cheese and mini Cheese come down with him. I pay $13,000 a year for a slip. I spend, I don't know, $400 or $500 a month on gas and beer.
Another
and-
$8,000 on maintenance. And
Yeah, another $8,000 on
scotch
maintenance.
and booze and other food.
If I am actually using that for clientele, literally, and Jeff and I are meeting with Greg down there this weekend, is who we're doing business with. What portion of that could I actually deduct legally as a business expense?
Yeah, I mean that's I do not do taxes for a living. I don't give tax advice, and hopefully the disclaimer saves me from
If
the
it was
lawyers
you,
coming to get me. But
how much
what I
would
would
you
do,
write
I would
off?
go to my CPA and I would say, listen, Mr. and Mrs. CPA, if you were to rent this boat on a daily basis, it's $1,000 a day. It's $2,000 a day. I know that, like, I've got a wakeboard boat. Like, you could spend $3,000 a day renting a wakeboard boat or whatever. So then I would say I spend 4 days a year entertaining, and this boat would cost $3,000 a day. Here's my total expenses of $50,000. Would you allow me to write off 4 days worth of my expenses?
So just every time, if I bring an investor down for the weekend.
It's just that is a tax preparer CPA
Okay,
question.
I'll ask my
It's a legitimate question.
But I
though.
would you need to frame it though. You don't
yeah.
you need to tell him my total expenses on the boat are X, and I checked on a website, and in Panama City, if I were to rent this boat, it's $2,500 a day to rent it, plus a captain or whatever. And then you go to your CPA with all that data, and the CPA either says you don't want to do this because it's a red flag. You can attract attention to your return, or your CPA says, if you can prove that Greg was on your boat for 2 days, you can deduct X. That's a.
So we will be able to deduct
grade.
that off, but our other huge expense, Johnny Walker Black, is just going to have to.
Yeah, but
we're just not going to be able to get anything
what
for
he
that.
said
Did you share it with the client?
Yeah,
Did you
just
share
Brett.
Did you share the Johnny Walker with the client?
Yeah.
Brett, what he said was key, though. You do not want to draw any red flags
No,
to yourself.
I don't.
Like home office is a great
like
example.
my buddy would buy a boat, and he would think that if as long as he bought that boat in his company's name or LLC's name, that he could write every expense off on that boat for the rest of his life and get away with
Is
it.
your
And
buddy-
I disagree.
Is your
with
buddy
him.
currently incarcerated, or
He thinks he's he thinks he's Donald Trump, but
Well, let's get into some of the. You're not here to give tax advice, and we don't want you to do that. We understand. We're going to put a disclaimer at the beginning of this show so that people are aware you're not giving tax advice. But there are people with legitimate questions, and they do consult their CPAs and their tax experts. But for the new guy who's sitting in California right now or sitting in East Tennessee thinking about getting into investing, what would you label some of the benefits? Financial benefits, not just the income or the equity growth, but planning benefits, tax benefits, or what are some of the tools that you can take advantage of as a property investor?
if you think about best case scenario, so best case scenario is I went back and my 2012 purchase of this rental property. So had I put 20% down or $6,000, I was netting $9,000 cash and paying tax on $7,000 cash. And so if the house can pay itself off in 4 or 5 years, the tenant paid for the house. Now I'm getting cash on an investment that I have zero cost in because the tenant paid for the house over time.
Because you've made your
and then you
investment
depreciate that $50,000 or $100,000 or $200,000 house down to zero. You could sell it at a cap gains rate of 0, 15, 20% based on your tax return. Or if you died with that property and got a step up in basis, you may never pay tax on the gain on that house. It's possible.
Really?
So when you die, you get a step up. So if I bought a house for $50,000, that house was worth $300,000, and I die with it and give it to my kids, they get a step up in basis. What you don't want to do is gift that house to the kids. If you gift the house to the kids, they inherit your basis of $50,000, and now the house is worth $300,000.
So now they've got capital gains.
There's during life benefits of rentals with it lowers your tax rate due to depreciation, expenses, etc. And then if you sell it, it's at a cap gain rate, which could be half of what ordinary income is or W-2 income. And then if you hold it and die with it, you might get a step up in basis as long as your estate is worth below a certain amount. Today you can die with $14 million per person and not pay death tax.
So how do you do that with my personal house? I don't gift it to my kids. What do I do with it?
So there's a couple of things.
Trust?
With your primary resident, each person gets a $250,000 exemption for your primary resident. And there's rules. Once again, let's call our CPA. You got to live there 3 out of the last 5 years. If you never rented it or you live there for 10 years, you could sell it. And if you're married and you bought it for $100, now it's worth $600, you pay 0 tax on that between you and your wife. To your point, you could just put it in a trust and leave it outright for your children and then get a step up. Got to be careful. If it's in an irrevocable trust, might not get a step up. So once again, we get estate planning attorneys involved and CPAs involved. I come up with ideas. I don't execute because I'm not licensed to do any of that stuff.
And that's the same with any rental real estate portfolios.
Yeah, but if you die with it and you got less than $14 million in your name and you're single, your kids could inherit $14 million and pay 0 taxation on that $14 million. That's the current unified
Let me ask you this question,
credit.
Terry. So let's say you did not sell your 18 properties. Let's say you still have them today. You've probably at this point got them.
I think Brett's trying to say, hey, Terry, you shouldn't have sold your properties. You weren't very smart. And he's saying it in a nice way because he's trying to be polite, right?
He just thinks he's Le Grand Fromage, doesn't he?
Yeah.
Little cheese.
Yeah,
I'll call on you when I need you to say something. So let's say you kept
those
for
would
whatever
be
reason
worth,
you kept
those
your
would be
properties.
worth 150% of the value I sold.
How would you, so for the listeners who are building portfolios, what would you have done with your portfolio today to maximize tax benefits, depreciation, and estate planning? What would you have done personally to really maximize everything?
One thing you think about is someone could be hurt on these properties. So you start having to think about when you own things, when you're a renter in the world and you're walking around and you don't have a balance sheet and net worth, you're not really worried about anybody coming after you because you can't suck blood out of a turnip. But when you build net worth through real estate and you've got $1 million and someone trips on your front porch because it ices over, then they sue you because they know that you have a boat at Pickwick and $1 million. So you probably want to get with an attorney, form an LLC, put those rentals in an LLC to have a little layer of protection against your personal balance sheet. Once again, I'm not giving advice. Call your attorney. And then you want to have an umbrella policy. And so as your net worth grows, you start with $1 million umbrella policy. Then you go to a $3 million umbrella policy. The umbrella policy covers you if someone trips on your boat and breaks their back. If someone falls on one of your rental property porch on the ice, like as your net worth goes up, you need to increase your umbrella policy. So LLC gives you a little bit of protection.
Second time we've had a guest mention umbrella policy.
Umbrella policy. So if you don't have a net worth, you're not worried about it. But if you're worth $2 million and you got real estate in a boat, and I trip on your front porch because you didn't get the ice off of there fast enough, I'm coming after you because I know you got money, right?
I'm from Louisiana. You'll never make it to court. I'm just saying. You'll never make it.
You won't have to worry about me ever reaching that $14 million mark, though.
For the Brits, what he's trying to say is, I'll be sleeping with the fishes.
That's right.
Is what he's trying to say.
No way.
He said it. Let me tell you, you're going to be sleeping with the fishes without saying you're going to be
Let
sleeping
me
with
give
the
you
fishes.
some advice. If a boy from Louisiana ever invites you to go fishing in Grand Isle, just say no.
I'm busy that weekend.
Just a tip.
I don't like chains around my ankles.
That's right.
I'm pretty well
Crab
equipped
bait.
to understand his Kunaz drivel. You know.
Coon ass. Raging Cajun.
I was a little
Raging
bit
Cajun.
concerned that we would have to have an interpreter between my Tennessee Southern drawl and your British accent. I didn't
Sorry,
know if
what
we
did
would
he
have
say?
to have an interpreter between. Obviously, I love your strategy of paying down the debt. Like
Yeah.
don't go to Vegas. Don't buy a Lamborghini. Pay the debt down. Get your cash flow. The cash flow becomes your retirement because one day you're going to stop working.
Preaching to a choir, man.
LLC gives you a little bit of protection against the rentals. Umbrella policy protects you if you get sued. And then work with an estate planning attorney to say, what happens with all this when I'm gone? Like, if I have $2 million in real estate and I have a son or daughter and they can't manage their $100, they blow their money on Friday when they get paid, do they need to inherit suddenly $2 million worth of real estate? And the answer may be no. So you can control that money from the grave.
From the grave?
You can set up a irrevocable trust. Those 20 properties can be in the trust. The kid could get $5,000 a month in income from the trust, but the kid can't get the $2 million and go to Vegas and blow it. So you can protect your assets.
You can put a time frame on that. So when the kid turns 40,
you give them a little bit. So
give them
like
everything.
I have a trust from. I have 5 kids, by the way.
Wow.
This is you're not from here, but if you were from here, you would say bless your heart, Terry. That's what you say when someone says.
I'm told that means damn your hinde.
So
5 kids.
So
how many,
five kids.
How many baby mamas? I'm just messing with you.
He is from Memphis. I mean, he could have a couple.
6.
The oldest is the oldest is from one mother, and the I have a
I'm just
stepchild, and
messing
then
with you,
three littles from the current wife. But a trust is set up for everyone, and they get fed money monthly, and then at 35 they get a little access to principal, and then at 45 you're just like, if they haven't learned their lesson, they get full access. And if there's $1 million in that trust for little Johnny, at 45, if he hasn't learned his lesson, he blows it. But you just hope that they have a good head on their shoulders by the time they're 45. But at 18, I just had a client that had $900,000 in an UPMA account, and at age 21, their daughter was suddenly going to have $900,000. We quickly, working with the daughter and the mother, put that in a trust and said, you probably don't need access to that today. And the daughter completely understood. The daughter signed the forms. The daughter turned 21. Now it's protected against creditors. It's protected against divorce. So, once again, work with an attorney. There's some great
let me ask
estate
you this question. Just let me know yes or no. Can you promote yourself as a planner, a financial planner?
Yes.
Okay.
Yes.
So what I want you to do is do a little of that. I mean, let me ask you this. So if I got a guy in Utah who is building a portfolio, and he is now thinking about all these what ifs with his kids and his wife, and as his kids are growing, can they reach out to you in Tennessee and get help? Or is that something you have to do only for people in Tennessee?
Yeah, so my core competency, my day job is managing people's investments. And so if you sold your portfolio of houses for $3 million and you didn't have income, and you came to me and said, Terry, I used to get $15,000 a month in income, and I sold my properties because I got tired of them. What do? We take that $3 million, turn it into a portfolio that then provides you with lifetime income.
Gotcha.
We figure out how to pay you monthly bonds and stocks and dividends and all those things.
What I'm curious about, and I'm not sure if that's what he was talking about or not, are you licensed in the state of Tennessee? Can only do stuff for people in Tennessee, or
I can work in all 50 states. I'm currently licensed in probably 20.
Okay.
A lot of FedEx execs that I have moved out to Arizona, so I go to Arizona about once a year and deal with them. Tupelo was another hotbed. We had a couple clients that didn't want their information being in the community. So once one found an advisor in Memphis, they all decided, hey, I don't want Tupelo talking about me.
Yeah.
And my $1 million, and so I have a little pocket in Tupelo, I have a pocket in Arizona, and then from there.
So basically, if
Georgia,
anybody
Texas,
listening
Florida.
today, they're building a portfolio and they've got questions, and maybe decide maybe I should hire a professional to help me plan my future for my kids and my wife and my portfolio and my retirement, they can get in touch with you.
Correct. Yeah. Now I'll give my email.
Give out your phone number and email.
Direct dial is 901-351-7740. And work email is Terry, TERRY .Morris, MORRIS @RaymondJames.com.
And you are not an attorney. You are not a CPA.
Not a CPA.
You're not giving tax advice or legal advice.
I'm not even talking to you guys.
You were just.
I've never met Little Cheese. I don't even know who Little Cheese is.
Well, there he is. Now you've met him.
Sorry, did you hear somebody? Who was that?
There's nobody here. There's nothing to see here.
What I wanted to get from you as a previous investor, understanding the investor side of it,
right,
and also understanding the financial planning side of it. What I took from this is you're telling us your experience and what you would have done and what you did do with your own properties. You're not giving advice to people.
Correct.
But if you want to help someone help you to build a financial future, then get in touch with Terry. Let him help you. At
least to guide you to the right spot.
Yeah.
If it's about estate planning, we're going to guide you to attorney. Your example in Utah, attorneys like to deal in their own state because state law is very specific.
So you'd find them a state attorney in Utah.
So I would get it. Yeah, these people
work
go to
together
conferences.
with them to build this.
So like
system.
currently, I had a Georgia scenario, and the Georgia scenario they needed a Tennessee license, and so the Georgia attorney had to refer the client to a Tennessee attorney because the Georgia attorney didn't feel comfortable with a Tennessee issue. So
Gotcha.
with the Utah, they all go to conferences, they all talk,
But you would work with that Utah attorney in this estate planning for that client.
Yeah, it just depends. If it's all real estate, if all you own is real estate, I'm going to refer you off to an attorney, and I'm not going to be in the middle of it. It's when you have to manage assets. You know, when people have cash. I mean, I looked at rates today. Like our money market today was yielding 4.31. We've got muni portfolios that are yielding net tax-effective yields of 5.5. So if you had a fleet of 100 rentals and you were kicking off and had a couple million in excess cash, I don't think your bank is paying you 4.31. That's an opportunity to come to the investment side. Although I'm inside of a bank, when investors want to buy stocks, bonds, treasuries, CDs, etc., they can go to the wealth side of the bank, and we can get them whatever they need. In this environment today, you take $1 million and buy munis kicking off 4+%. That tax affects you into a 6 to 7% tax effective yield. There's no bank in the country paying anybody 6%.
No.
So that's what I was going to ask you. Take your guy Daniel, who's built a fortune for himself, and a lot of his properties are paid off, and he's just making bukus of cash flow.
We're going to refer to Daniel as the Big Cheese.
He's the Big Cheese.
Big Cheese.
Would Big Cheese Daniel? What would he do with that excess cash? Is that where you come in? He'd come talk to you. What would you tell him to do with it? Money markets, treasury bills.
What I find is that people that have an expertise, and once you become Daniel, your expertise is real estate. Those people like investing in what they know. So when I tell them about a 4% money market or an 8% fund, and I say, hey, I've got this mutual fund, it's made 8% a year, they begin to tell me that, hey, Terry, I've tripled my money in real estate because I bought pre-COVID. So, but if they've got $5 million parked at the bank earning 3%, and they would like to earn 4 or 5 or 6, on the wealth side, we can get them things sometimes the bank can't do.
A savvy investor is going to want to do something. He's not want to just leave it.
And this is daily liquid. We're not talking about a 5-year tie-up or a 1-year tie-up in a CD. I mean, we're talking about money markets that are daily liquid, meaning you can have your money in your account in 2 business days. And with municipals, you could sell them in a day or 2, and you could have your money in your bank account, being able to spend it within 3 business days.
So you basically just can set him up like a financial planner with his
correct
IRAs and Roth IRAs.
And if you have a business, you want to do maybe a SEP IRA and take a tax deduction. And so you were talking about deductions. Airplane, probably bad idea. Boat, bad idea. Family trip to Disney, probably bad idea.
Johnny Walker Black.
But Johnny Walker
Good
Black
idea.
depends on
Good
whether you
idea.
feed it to the clients or not. When we finish this, I sometimes collect bourbons and give bourbons to clients. So we'll have to.
Well, we're going to start the boat.
conversation.
The boat year starts this coming weekend, so you're going to have to come down. You're going to have to come around and find us. Yeah, we do big crab boils on the dock. We have big parties.
Bourbon and boats.
Absolutely.
Absolutely. So, to your point, especially if you had employees and wanted to set up a retirement plan for your employees, or if you wanted to start saving, $30,000-$40,000 a year on taxes by using a retirement plan, a SEP IRA, that's what we specialize in. You show me your tax return, show me your portfolio, and I say, hey, you're missing out on a $40,000 tax deduction because you could have a retirement plan.
Right.
You could start a 401k for just you and your business, a solo 401k, and you could defer $66,000 in that. And if you're in a 30% bracket, you just save yourself 30% of $66,000. And if it was excess cash flow, you're just building for retirement.
Right.
And then you don't draw that money out of the IRA until you've retired. And then you theoretically in retirement, you're at a lower tax bracket.
Jesus, it's so complicated.
I know. But
I don't know anybody ever retires as complicated as it
but
is
I mean,
to save.
It makes
started
sense
studying this
someone,
stuff in 1986, and I'm still working on it.
But it makes sense for someone like Daniel who's just got excessive cash flow coming in.
I thought we were supposed to refer to Daniel as Big Cheese.
Well, Big Cheese.
Big Cheese.
He's got excess cash flow coming in. I don't know what he does with it. It's none of my business. But
he's building an 80-unit apartment complex right now.
Well, there's that.
Right. He doesn't want to hear about 4% money markets when he's
going to build that and sell it and probably
right?
make a $3 million profit on it. So he's going to have to move that money somewhere.
A more conservative guy like me that that would have a
medium-sized cheese. Medium-sized cheese.
We call him the cheese-it.
That would have a handful of conservative guy like me that have a handful of rental properties. He's getting older. He's tired of fooling with them, but he doesn't want to give them up. He's making cash flow. But you didn't want to just leave it at a bank. I'm too lazy to go out and build an apartment complex at my age, so I'm just going to come give it to you and let you make me 4 or 5%. There's
Correct.
nothing wrong with that.
Or, you could be in an equity portfolio that made 20% last year.
Yeah.
So
that's
it just
more
depends.
risky, obviously, right?
You just have to, if you're willing to lose, you can make a gain, and if you want something safe,
I'm
you're going to
too
be
old
in
for
the.
that risk.
If you want something safe, you're going to be in the 4 to 5% range.
I need something steady, safe, about 8 or 9%.
Yeah.
Can you hook me up? About
Let's
8
talk.
or 9%.
Let's talk offline.
All right. Well, we appreciate everybody listening to this 5 o'clock Summer Real Estate Investor Podcast. Terry, thank you for being here. Again, you're not an attorney. You're not a CPA. You're just here having fun with the guys. We appreciate you listening, and check out our next episode. We'll see you soon.
For more common sense real estate tips, listen and subscribe at 5o'clocksomewherepodcast.com. The 5 O'Clock Somewhere Real Estate Investor Podcast is a Sound Ideas Group production.